So here's the question. Is Dave Ramsey right about whole life insurance? Let's talk about it.
Whole life insurance, cash value life insurance is the payday lender of the middle class. I've been screwing the middle class for decades. No one sells whole life insurance except insurance people. No one believes in it in the financial planning arena that doesn't sell it. All the independent thinkers and all the people who do financial planning based on numbers and mathematics believe whole life is a ripoff and don't sell it.
All right, Rod, what do you think? Is Dave
Well,
right?
He is wrong in many assets. The beginning is to say that nobody talks about it or cares about it or suggests that someone should have whole life except the people who are out selling it is silly, right? Because are there people who have whole life insurance and do they tell their friends about it and do they promote it? Yes. Okay. But then he's saying, no, but I'm talking about the big financial thinkers. No one out there that's a big financial thinker is suggesting that anyone should have cash value life insurance, whole life insurance.
And further, Rod, nobody that knows anything about the analytics and the numbers would even consider using life insurance, whole life insurance in any meaningful way. Is that true?
It's not. And there are many examples we could give, but here's the one I'm going to give. Wade Pfau, look him up. He is a professor at the American College, and he has done extensive research, numbers-based research in finance. He's a professor of finance, and he can show you in the numbers how in several different reasons, having whole life insurance as part of your mix is absolutely valuable. More valuable than if you only had stocks and bonds and mutual funds. More valuable than if you only had a pension or an annuity or something else. By adding it, you get more value out of it in your retirement, etc., because it's part of the mix.
Okay, I've also got to say this, right? I'm just thinking about this framework that nobody but the people who sell it would actually like recommend or like it. And I've been around this business now for 20 years, and I'm just telling you my own personal experiences that this is ridiculous. In fact, I would suggest that if you're a high income earner and you've developed any meaningful assets, that like a real qualified financial planner would be doing a massive disservice. And not only that, like in my experience, they absolutely are recommending permanent life insurance in one form or another, right? Even if the primary purpose is for estate taxes.
Yeah.
Everybody knows that that's at least, like at the very least, estate taxes is a meaningful use of life insurance, right?
Yeah.
So it's just kind of a ridiculous thought. And then of course, my other thought here is just, if it's only the people who sell it that are like promoting, then like it just wouldn't get very far. You know
Right.
what I mean? And yet we get referrals every day from existing clients who have no dog in the fight, but who love the experience of utilizing their policy to invest through. And they're saying, hey, so and so friend, you really got to be working with Money Insights on this. So I'm telling you, Dave, you're just plain wrong. I don't know what market you're in, but that is not the case in our market.
Agreed.
All right, let's go
Okay.
on to the next one.
All right, let's hear this one.
I mean, banks use this product to.
No, they do not. You've been watching too much TikTok. Banks do not use whole life. Not ever. Banks nowhere, no banks sell.
I would respectfully disagree.
No, they don't. They do not use whole life insurance.
What bank? Well, we Google it and see what typically banks do with their money, but I believe
typically banks never put money. Let me tell you what banks do. They put it in bonds. They're required to. They wouldn't be allowed by federal regulations to put it in whole life.
Woo, Dave's really showing his ignorance on this one. So we talked about this going into the video, Rod, but I have a close friend for years and years now whose dad made a career in what is called bank-owned life insurance, which is literally selling massive cash value life insurance that's on executive of banks that goes from, but basically to benefit both the executive, but primarily to benefit the bank from one
Yeah.
generation to the next. So it's actually twofold. They're putting huge amounts of liquid capital there, but then they're also making it useful as kind of a next generation, replace their key executives and get that death benefit on the back end. So it's kind of like twofold. But to suggest that they're not doing that is absolutely ridiculous. And it was funnier. The guy said something like, "Well, you can look on Google," and my first thought was, "Well, a good starting point is you can just Google it to find out if Dave's actually right. Quickly find out that he's not." But of course, like we have again personal experience that says, "Dave, you're just full of it, man." Anyway,
Yeah, it's a category, right? There's even an acronym for us: bank-owned life insurance, or BOLI, right? And its close friend, COLI, company-owned life insurance, right? So the idea of it being an asset on the balance sheet of the bank is actually one of their most secure assets that they keep. Like when they're saying, "Hey, we need to have liquidity, we need to be able to have access to that." Obviously, it's liquidity, so I have access to it, but it's in a place where it's safe and it's growing, and they're leaning on. So I'm not saying they don't buy bonds; they do buy a lot of bonds, but the idea that that's the only place they ever put their money is ridiculous.
unbelievable. Okay, let's go on to the next one.
Okay.
The great ripoff of cash value life insurance is that you will never get both, and you have paid for both. You paid extra for savings, and you have life insurance. If you die, they're going to pay the life insurance and then keep your savings. If you cash out the savings, they're going to cancel your life insurance.
Rod, talk to us.
Yeah. So
Like
this
true or
one,
false from Dave.
this is one we hear all the time because he beats this drum, and so people just take it as if it's true. But okay, so here's the deal. Let's just give a little more context. Okay, let's just say I have a $500,000 life insurance policy. That's the death benefit, and it has $50,000 in it.
Mhm.
On the statement, it shows $500,000 death benefit, $50,000 cash value. What Dave is saying is, when I die, my beneficiaries only get the 500,000. The 50,000 goes away. They keep it, is what he says, right?
Yep, that's what he's suggesting.
Okay, but what in reality is happening is the insurance that I'm paying for at that moment, I'm not paying for 500,000 of insurance, right? Because the logic says if I have 50,000 sitting in my account and I die, then the insurance company already has the 50 sitting there. They only have to come up with 450 from somewhere else, right? So, and it's again, an insurance company, when that happens, they're only charging me for the $450,000 of insurance.
Yep,
So
that's what they call the net amount at risk. That's the
correct.
amount that they are holding as risk. That's what an insurance company does. They hold risk. But guess what? That 50,000, that cash, there's no risk behind that. So they're literally making it whole by bringing them together. And again, the emphasis here is, to your point, Rod, they're not making you pay for 500, you're paying for 450.
Yep.
Weird. So
Yeah.
again, Dave's just so ignorant, it's ridiculous. He's one of those dudes, he just is like, has a loud enough voice that he throws it out there enough that people just believe it. And, if someone tries to fact check him, he just hangs up on him.
Yes.
So let us know what you think of Dave and whether he's right or whether we're right and why.